Hi everyone, it's me, your manuishu, and welcome back to my YouTube channel, manuishu Acca Classes. So in this video, I'm going to solve 5 further more question of the Kaplan kit of F6. So if you're watching my video for the first time, don't forget to subscribe my channel and share it among your friends so that they could also have a benefit. In the previous video, I have solved at least 20 question in the part. I think it's 4 video altogether. So if you haven't watched out that video, you can find the link in the description box, or it will be blink on the right hand side of your screen. Okay, so let's start. Okay, so question number is 21. What is the Melinda property income for the tax year 23-24, assuming that any beneficial elections are made? On 6 April 2023, Melinda rented out a furnished room in her house to the Jenny at a rent of $750 a month, and Jenny continued to rent the room on the same terms until 5 July 2024. Melinda continued to live in the house and paid for all the living expense of which $475 a month related to the room rented out to Jenny. Okay, so basically the question is asking for the Melinda property income, right? So Melinda property income for the tax year, they're asking for 23-24. So rental income received by Melinda is, because she has rented out her furnished room, like in which she is living, right? So, and rent is $750 per month. On 6 April, she started to rent, so it's for the 12 months, right? And less cost. And the cost she allocated to the related to the room rented out to Jenny is it's $475 per month, and it's for 12 months it's 5,700. But remember one thing: when you are letting out your furnished room to the other party, in that case you are eligible for the rent a room relief, right? So rent a room according to rent a room relief, you can claim the expense at the higher of 7,500 or the actual cost. In this case, the actual cost is 5,700 and the 7,500 considered to be the higher, right? So we will write down in note: expense claimed is higher of, the first one is 7,500 and second one is actual expense, that is in our case 5,700, right? So in this case, obviously she will be entitled for the 7,500 rather than 5,700. Okay, so after deducting all these two, she will be having her property income of 1,500. Okay. Okay, so next question. What is the sole taxable property income for the tax year 2024 in respect of the lease premium? This is quite simple. We did earlier as well this similar kind of question. So basically, see, on 1st October, she granted a lease of 25 years of freehold property in return for the premium. Premium amount is 20,000, right? So we will deduct. So before doing this, I will just make a recap the concept of the premium. In case of premium, first thing you have to look whether the premium lease is for the more than 50 years or less than 50 years. So if it is more than 50 years, in that case, it will consider to be the disposal of those property, and in that case, capital gain tax will be calculated. But if it is less than 50 years, as in our case, so in that case, CGT adjustment need to be made. And how do we make that? The formula is premium amount into 2% into n minus 1. So m seems to be the number of period to which you have been leased the property. So 2% into property total period is 25 minus 1. Okay. So after adjusting this, we will arrive at taxable property income. So one more thing I would like to clear, because I think I have been also facing while doing this when I was studying F6. So problem was that just don't get confused in the taxable property income as a taxable income, because a taxable property income means all those expense deducted against the property income which are allowable. but taxable income is after deducting the personal allowance. So be careful what the question is asking, just be confirmed with this term, right? Okay. Okay, so we got our taxable property income, which is 10,400. Okay, so next question. What is the Meiji property income for the tax year 20 and 24? Fine. She has a cottage which let out at furnished for an annual rent of 9,600 payable monthly in advance. Okay, so rental income. So in case of individual, we used to consider cash basis unless and until her rental income exceed 150,000 a year. Okay. So in that case, we used to we have to use the accrual basis if those limits exceed. But below that, we will use the cash basis for the individual. But in case of company, we always use the accrual basis. So Maisie is the individual, so we have to use the cash basis. So as she has received an annual rental income of 9,600, fine, and which is monthly is payable in advance, so we don't have to make adjustment, right? So she incurred the following expense, and expense was council tax. Council tax. So just remember, just to look at the date on which it has been paid, because on cash basis we consider the payment which has been made actually during the tax year, right? 6 April 2023 falls in the tax year 23 and 24, so we will deduct 900 from here. And other is insurance, it's also a deductible amount, right? So insurance was paid on 6 October 2023, which is in the tax year 2024. Insurance for the year in 30 September 2024, previous year 480 paid on the 5 October 2020. So basically, no matter whether we have been paid the previous year insurance income, we don't care. We only care whether the actual cash, what the actual cash has been paid during the year, right? So it has been paid during the year, so 540 will be deductible again. So again, 9 December 2020 replaced the refrigerator with the similar model. So obviously, replacement expenditure relief will be applicable on if it has been replaced with the same kind of assets, right? So it is deductible. So refrigerator amount is 870. So after netting of all these, we will arrive at the property income, and that's the amount. Let me check. Okay, so it's 7290, option B. Okay. Okay, so next question. Okay, what is the Stefina taxable property income for the tax year 2024? Stefina only income is from letting out furnished residential property. So in case of whenever question tell residential property, you have to be think that interest expense, if any mortgage has been taken against those property, it is not allowable. The individual will only be entitled for the 20% as a tax credit. Okay, when we will face those situations, I will again repeat this. Okay, but think about as this from the finance cost perspective as well. So Stefana only income is from letting out furnished residential property, none of which is qualifying furnished holiday accommodation. Okay, fine. So it's not a qualifying furnished holiday accommodation for the tax year 23. Her taxable property income was 25,000. So her rental income. What is the income? 25,000 before deduction of following. Okay. Payment of 500 to replace the damaged kitchen unit in the fixed kitchen. Obviously it has been replaced the previous installed unit. Okay, so it will be deductible. So I will write down replacement of kitchen unit, right? So amount is 500. So interest paid, yeah, the point came. Interest paid of 12,000 on the loan acquired on one property. So in case of residential property, if you have taken any mortgage, it won't be an allowed expense. You will only get the 20% of the interest amount as a tax credit. Okay, so don't include this. I'm again repeating this thing. So taxable property income will be, okay, so it's 24,500. Okay, so 25. What is the EVA taxable employment income assuming her employer paid her 43 penny per business mile? Okay, fine. Question number 25. Okay. So question number 25, we have to calculate the EVA taxable employment income. Fine. EVA earned an annual salary of 55,000 throughout the tax year 2024. So her annual salary is 55,000, right? And she used her own car for the business travel, and she traveled 14,500 business miles during the tax year 2023, 23 and 24. So in case of you're using your own vehicle for the for the your employment purpose, in that case, whatever the expense you are occurring in case of the business miles or travel one, it will be refunded by the your employer. And but there are certain limit to which it will be exempt. After any excess amount refundable will be taxable. If less amount refunded, in that case you will be get a allowable deduction from your employment income. So I must say you might get confused over this wording. Don't get confused. I will make each and everything clear if such question come to our point, right? Okay, so annual salary is 55,000, right? So she used her car for the business travel. So now think for just make it up for me. So you might know the up to 10,000 the government allow I think it's 45 penny, right? If I'm not wrong, let me confirm. Yes, up to 10,000 45 penny will be reversed by the HMRC. Allowable deduction. It is considered to be acceptable, and above that 25 penny. But the she travel the miles 14,500. So if we will break this into two part, one is 10,000, other one is 4,500. So according to 0.5 penny will be allowable for this, 0.25 penny allowable for this. So multiplying these two, okay, okay, so okay, so allowable, you can say the exempt one. Till here no charges applicable. Allowance received first, received by employer. How much he received from the employer? For the 14,500, Eva received 43 penny, I guess. I read somewhere, yeah, 43 penny, 0.43, so 6235. She received 6235, but according to HMRC, only the allowable expense for this mile is 5,625. So she received extra amount from the from her employer, right? So in that case, this extra amount will be taxable. So okay, uh, okay. So so she received from employer 6235, and allowable was as calculated below 5 to, let me just check this. Okay, so allowable was 5625, right? So how much access she received? Access amount will be at these two. Okay, so total employment income which is taxable now is, okay, so this is 55610. Okay, okay, so in this video we will do till 25 number, or we can continue. How much remaining? It's too much, I think. Okay, next video we will start from 26. Okay, So thank you so much for watching. So stay tuned with my channel for more video.